All right, we are officially in a bear market. A technical bear market is 385 on the S&P 500. We hit below 385. It's here. We're here. It is a bear market. Let me adjust. You see how bare it is? The camera was not even adjusting correctly. That's how screwed up everything is right now. This is rough. There we go. S&P 382. We are below. We're down 2% on the day. Below 385, which is a technical bear market, which means we are officially in a bear market. QQQ, just 281, down another almost 3%. It was at 300 2 days ago, so it's down 19 points. Palantir 782. Palantir is actually holding up well. It's down 6% today, but we saw Palantir at like 644, right? We saw it at some of the worst levels, so it's not the craziest right now. It obviously has a long way more to go. The big story of the day is this one right here. This one hit 635 the other day, a couple minutes ago. It's down almost 10% on the day. It was down an official 10%. 642 Tesla. Tesla. Look, either you love Tesla at 900, 800 when they're a blowout quarter, or you hated them. It's one or the other. And you either really want Tesla to succeed because of where it's at, and you're willing to buy the dip even more, or you're starting to get worried. Now, why are people getting worried about Tesla? Well, Elon Musk is in a controversy. A new article came out about him. He's trying to get this Twitter thing done. Maybe doesn't want this Twitter thing, kind of going back and forth. There's claims of bots, claims of spam, no spam bots. It's all a mess right now in the context of what he's focusing on, and it's obviously hindered Tesla's base. Now, would Tesla be at this level if Elon wasn't doing this Twitter stuff? I think it still would be, because the macro, if the S&P fell to 380, Tesla was not going to survive at 800. That's just not happening. So a lot of the stuff that's happening, if it was going to happen, it's probably the best time for it to happen, because it's not the sole reason why Tesla is down this much. It's the macro. But man, things are rough for Tesla. And I want to talk a little bit about what are the stocks I'm looking for, some of the price points I'm looking for. Apple, 133. Apple at 140, 145 was like, oh my gosh, that's bad. Apple below 140. Not even 135, below 135. Do you know how much it takes to move Apple? Because they have so many shares outstanding, because they've done like so many stock splits, or else the price would be like $87,000 a share. It's a lot. It's a lot for Apple. So that means the market really is putting in a lot of puts on Apple and shorting them and shorting it, expecting it to go down. Now, one of the things about Apple is that its prior high, which ultimately becomes its resistance around COVID, was 125. So we are going to see, if we do see Apple dip to 125, that's where, things get a little bit more interesting. Coinbase holding up decently, down 5%, but it's at 63. It's not below 60 yet. Robinhood also holding up decently. Enphase holding up decently. Some of these stocks have already been battered down so much. Same thing with, let's look at Tattooed Chef. Where's Tattooed Chef? Where is it? I just saw it. Spotify holding up decently as well. Netflix holding up decently. It's just the indices that got kind of cut. Let me search it up right here. TTCF. 654. Yeah, it's holding up as well. A lot of these stocks, we've seen them at these prices. Tesla is the big one that today just, usually holds up around 750, 780. It just collapsed today. Facebook, we've seen this at 182 before. It was at 200 a while ago, really like a day or two ago. It's down. Roku's at 90 as well. And ARK has held up down 5%, but not below 30 or 40. So what does this ultimately mean? Well, number one, we're in a bear market, okay? The market is here. It is bear. Now, the question is, how much more bear does it go? Morgan Stanley and Goldman Sachs are all saying 3,400-ish, 3,360. That's the S&P 500's bottom. When we hit that, which is about close to around 40% drop, 35, 40% drop from the peak, which is at 478, then we're good for moving forward. And the question is it going to go worse than that? Is it going to be a 50% drop like it was in 2008, 2009? Or is it going to be, 380, 370, 360? Maybe we hit 350 and then we shoot back up. I don't know. What I do know is that this is going to probably take a while to get out of. It doesn't seem like it's going to just happen once and there's a V-shaped recovery. Maybe that happens. Maybe it doesn't. No one obviously knows what's going to happen. But it looks like there are no unique catalysts outside of inflation going down. And once that happens, we'll see what happens. But inflation has not shown signs yet to dramatically go down. Now, the inventory increases in Walmart, which is incredibly important to understand from the earnings call, up 32% year over year is good because that means consumers aren't buying that much, which is why Walmart has all these inventories. If you've got 32% more TVs, it's because people aren't buying TVs, which is good because that means you have more supply, you have less demand, the price of that supply goes down, which means inflation starts to come down. And at a big box retailer like Walmart, those trends should exist in Target, in Ross stores, which is down 20% by the way, which I didn't even know was a stock, but here's the stock right here, $70 today. Let me know in the comments if you shop at a Ross. I don't think I've ever been to one before. And also for Target, right? And Costco. So those are the stocks that likely will have inventory buildups, which is good for the consumer because that means prices will go down as consumer sentiment begins to go down as well. Consumer demand being high and not having inventories is bad because then people want to buy a lot of TVs. There's not that many TVs, so the prices of TVs go up, which causes inflation. What am I looking to buy now? If 3,400 is the bear market that I'm starting to think JP Morgan and Goldman Sachs believe is going to be happening, then the question is, what do I want to buy? Well, Google, which is getting below 2,200 today, looking like an absolute monster, 2,148. My price target on this one is 1,900, 1,850 to 1,900. That may sound crazy, but if we hit 3,400 on the S&P, we're probably getting there. I mean, it's just if we go down another 40 points from 380 on the S&P, no one's safe. Palantir might be at $3-4. Google 1,800. I want to buy. If you just saw the new Google keynote that came out with Sundar Pichai, you would think, man, this company is undervalued just with the stuff that they're doing. Now, there is a little bit of scare on Google because there's this new Congress legislation that wants to break them up. They did $55 billion in ads last quarter, ad revenue. Congress is like, if you make $20 billion or more, you can't operate in other ad markets, which is kind of insane because Google operates in every ad market because Google is an advertising behemoth. So Congress wants to stop that. If that passes, it's bad. I don't think that's going to pass, but I guess we'll have to keep updated on that. That is a potential risk if that lights up and that gets more awareness on it and that ultimately becomes a bill. So that's one risk with Google. Tesla, look, 500 is where my loading price is. I mean, now people may say, oh, you're crazy not to buy this dip, start DCA. Man, I'm not comfortable with it yet. I know Tesla's probably just going to go back up to 750. This is just a really red day. It's just if I initiate a test position, I want it to be a decently sized test position, at least 5,000. And I don't know. I don't trust it yet. And it has nothing to do with Tesla. It has nothing to do with any of these stocks. It has everything to do with the macro. If the S&P goes to 3,400, no stock is safe. That's the one thing I want to get clear out of this. So it has nothing to do with Tesla. It has everything to do with my inability to believe that we've hit a bottom or that the S&P is not going to have more of these days. Again, dead cats like to bounce. Literally a couple of days ago, we were green. It was great. And then it's right back down. There's zero reason for us to be green in this market. We have to deal with the pain. And as we deal with the pain, eventually we can just rip the Band-Aid off and go forward and keep going. Palantir, this is a stock that I have a $19.66 average on. I mean, I want to buy more Palantir. At 785, I just believe that it has more room to go to the downside, especially if the S&P goes down lower. So Palantir, we might see it at 6. I might see it at $5. Seeking Alpha article will come true. And then I will be initiating some more buys there. Again, if you are DCAing right now, all the more power to you. I'm not saying don't DCA. I'm not saying go all in. My perspective on how I think of the market is that there is more pain, and there is no logical reason why there's not going to be more pain. And as a result of that, I've decided to be more patient. So I'm being more patient. And I don't even have that much dry powder to invest, but if we get some ridiculous prices, I will put more into the market. The question is, when does the prices get truly ridiculous? I don't think this is truly ridiculous yet. It's ridiculous, but if the S&P goes lower, it's not truly ridiculous. Let's look at the NASDAQ as well today. Yeah, we're getting close to hitting the 10,000 range. If we get to 10, it was at 11,035. We're $35 away from hitting the 10,000 range. 10,500, I believe, is similar to SPY hitting around 3,400 on the S&P. So we're going to see that. QQQ, again, if you're big on technology, betting on technology, this is a great ETF to buy. The question is, technology is getting destroyed. It's going to be back. It's not like technology is going away. We're not going back to the caveman times. The question is when the market's going to want to value tech. And if there's no point of like buying it when the market doesn't want to value tech, unless you really think this is, getting close to where you see at the bottom. So QQQ I'd want to buy as well as an ETF to hold in the long term along with the S&P. I just don't think right now exactly is the best time to buy it, given specifically QQQ is in tech and the market is just not valuing tech right now. Why is this happening, by the way? Remember, rising interest rates. Rising interest rates are bad for technology companies because it costs more to borrow capital. Valuations get compressed in the future because if you're getting valued for your future cash flows and it costs more to get those future cash flows, it ultimately compresses valuation. So, Interest rates are not good for technology stocks that are not making profits right now and are valued on profits in the future, because those profits are going to be valued less in the future, which means their valuations right now are going to be valued less. Old technology companies are getting hit by this, whether you're a SPAC, a growth stock, Google, Apple, whatever you are. Eventually, this will go away. These companies are not going away. Technology is not going away. The question is, what stocks are you going to get during this downturn, and when are you going to enter your position, and how long is it going to take for the market to recognize that, okay, we've consolidated something that's bad and we're going to go forward, along with when is inflation and supply chain going to get better, and if there's going to be layoffs and cause an actual recession, or is it just like a technical recession that hurts Wall Street but not necessarily Main Street? I don't know. We're going to see, but the S&P has officially entered a bear market territory. We are here. It is happening. And ultimately, we're going to see how this all plays out. Thank you guys for watching. Let me know your thoughts in the comments. Let me know what stocks you're buying. Let me know what you're thinking about certain stocks. Are you loading up on Palantir, Google, Tesla, any other stocks that you're interested in, and S&P, QQQ, and we'll see how this turns out over the next couple of days. I live stream the market every morning, 9:20 a.m. I will be there on Monday. We had a live stream today. It was green in the morning. We were okay. And then as soon as they end the live stream, it's just, maybe I need to live stream forever. So like the market stops dropping. But thank you guys so much for watching. I'll talk to you guys later, and looking forward to comments. See you in the next one.